Hey, Jake with ChainGenius, back for another Crypto Daily update after taking the weekend off. And today we're going to talk about the continued consolidation in the market, a bunch of FUD around NEO, who's telling the truth, CoinBase being caught with their pants down, and a little bit of what's happening in the market at large. So jumping right into it, the first thing is looking at CoinMarketCap for the 1 month view. The market's still moving sideways. It's not that exciting. Looking at the total market capitalization, it means since we're bopping around between 420 and 500 billion, that no new real money is coming into the market currently. And that's a mixed message. First of all, consolidations are good. We had the run from 400 to 800 billion in December. We're only 2 months past that. So it's expected that we should consolidate for a little while. The other thing is, while we consolidate, Bitcoin's market cap dominance is slowly creeping back up from 35 up to 41.7 currently. And that's a bad thing if you're an alt holder. It depends if your bag is heavy with Bitcoin or alts, but generally during a consolidation, money consolidates around Bitcoin. That usually bleeds out the alt market. I myself am pretty heavily in alts, so this makes me a little butthurt, but what am I going to do about it besides complain? And I think we're going to have a continued consolidation over the next couple of weeks until everyone starts getting that tax money back. In terms of market movers, though, there are a few I wanted to touch on. First of all, Zilliqa. They recently had the Binance competition. They won the Community Coin of the Month, so they just recently got listed, and most times any coin listed on Binance gives a quick pump. Ripple saw some movement, not as big, but the rumor train is taking off again, just like beginning of December, that Coinbase is going to be listing them, especially because they're going to be on CNBC. The CEO of Ripple, along with Coinbase's Brian Armstrong, the CEO there. Particle saw some move over rumors of their marketplace being launched towards the end of March this month. Not confirmed, but the rumor mill's driving the price a little bit. And then on a much smaller market cap that I wanted to talk about was Bloom. I'm personally, being transparent, a bag holder of these guys, have been since the ICO. They're a decentralized credit network. In the past 7 days, they just saw a 60% market increase, and that's because of more bad news coming out of Equifax. For those that haven't followed, Equifax had their system compromised and something like 145 million social security numbers and information was lost. And it recently came to light that another 2.4 million might have been compromised. Personally, I think the whole way that this company has handled things has been disastrous. It's very opportunistic for Bloom, which is great if they can pull it off. And they saw record signups because of this news, which is great. Moving on, the other thing I wanted to talk about is FUD in the marketplace. Specifically, NEO this weekend got hit pretty hard from a few different sources over a few different topics. But what I want to tell everyone is you've really got to dig in and see where everyone's incentives are aligned, because someone may be pushing their own agenda, and it's really important that you do your own research. And I'm going to continue beating you over the head with this as we go through more and more videos, because you can't just take one side of the story. There's two sides to every story, as they say. Someone owns a bag, and they're probably trying to sell you it or push down the competitor, but you always have to just look at both sides to a story. Jumping into this, related to NEO this weekend, Eric Wall posted a tweet storm calling out a lot of the issues with NEO's consensus algorithm, Byzantine fault tolerance. Byzantine fault tolerance? And that is basically a delegated proof of stake, where there's a couple of nodes, 7 in this case, that handle verifying all the transactions and blocks on NEO's blockchain. And the problem is currently it's a round-robin system where if one of them is offline, or at least according to Eric Wall, then the whole mainnet comes to a stop until that node comes on and can validate itself. And he basically says this is a stupid oversight that anyone should have been able to account for. One of the other things was related to how expensive NEO smart contracts are. Currently they cost 500 gas, which is anywhere between $30,000 to $35,000, which is expensive, but at the same time, it may not be a bad thing because it prevents spam or garbage dApps from being launched on the blockchain. So take that as it will. The other one is the Store of Value blog. They had a post recently about how NEO is a multi-billion-dollar disaster, and goes on and talks about how the nodes are under control of the foundation, they're centralized, the throughput of the blockchain isn't as high as advertised, and he goes on and lists about a bunch of examples about ICOs that have had a bunch of issues. But if you dig into this, what I really enjoy is Malcolm Lederer, who's the head of R&D in the States here for NEO, took to Medium to publicly address some of the concerns, and he actually posted a few different links talking about some of the issues, and he says we're more than open to have a conversation about this. And he links City of Zion talking about how the consensus algorithm actually doesn't fall apart. They did a test killing one of the 4 nodes on a test net, and the consensus algorithm still worked. And then another one that was brought up by Atomic Ghost on Medium is talking about store of value and how they might have misaligned incentives. They actually are heavily invested in Quantum, arguably NEO's main competitor. They also talk about a few different things, how a lot of the posts from Store of Value blog may or may not be upvoted by a bunch of different alts, and this is called astroturfing, where you basically fake a community grassroots sentiment around a project. So if this one person is using multiple accounts in order to upvote their content, that can be seen as fraudulent or dishonest. And if you're owning Quantum, you should be transparent. And I agree about this for anyone. If you're talking about a potential competitor or trying to push up a project, you should disclose if you have an investment into that project. Just like I did with Bloom. I have Bloom, I like it. You may not, that's fine, but you should at least let everyone know what is or is not happening in the back end. It's about having a constructive conversation. Taking this further, someone provides some evidence about Store of Value blog potentially astroturfing using multiple accounts, and like I said, I'll link all this stuff in the bottom. The last thing is, related to centralization of a node, specifically talking about that one point, is most blockchains are still beta products. And that means they need to be incubated. You can't just let them out into the wild and hope to God everything works. Whether it's Bitcoin with proof of work and centralized around mining, Bitcoin Core being centralized potentially around Blockstream, NEO and Cardano, all their nodes are under control of the foundation. Cardano is launching their consensus algorithm in Q2 of this year and will be potentially opening up node control to other people. Ethereum, as this is a CoinDesk article that just came out today, talks about how most blockchains are pretty much centralized. Ethereum is centralized in terms of the decision makers and development. Looking at this chart here, participant ID number 1 is Vitalik, who does a lion's share of the code updates for NEO, and the next 2 in line make up a majority of most of the pushed GitHub commits. And it's just a reality of the tech. It's still too new, and you can't determine what will or won't work out in the wild. So you have to have some mechanism to allow it to be incubated until it's ready. This is totally my opinion. I think it's fine. It's all about, in the next couple of years, watching to see which projects actually do give up control versus don't. And that's the problem I have with a lot of token sales. Taking Red Pulse specifically as an example, it's a company that tokenized their subscription service, but they still control every aspect of it. The only thing the token did is act as a replacement for the credit card fees. You get no control over it. So to me, that doesn't really make sense as a decentralized blockchain application. Moving on to the last thing related to just making sure you have a balanced viewpoint on things is Coinbase recently is getting hit by a lawsuit for insider trading. And glossing over this, the big scandal is basically, did Coinbase buy before they listed Bitcoin Cash? Because there was a pump on the price right before the announcement from Coinbase. And to be fair and in defense of Coinbase, is that insider trading is happening everywhere. You see this with Binance, and when Zcash was getting listed, there was a pump up a few days or a day before Binance actually listed. And it's because these things are unregulated. So there's a lot of incentive, because there's a lot of money to be made, for employees or employees' best friends, telling them through an encrypted app, things like that, to say, hey, we may or may not be listing this coin in a couple of weeks. It's hard to prevent it, and I don't want to say it's only Coinbase. Coinbase happens to be the most public figure that's getting the spotlight cast on them right now for this. And continuing related to this whole f.u.d. versus what's the truth, there's a paste bin that got listed yesterday, and it talks about how Digital Currency Initiative, the DCI group out of MIT Media Lab, and all the IOTA FUD that recently came out related to researchers. Again, there might be some misaligned incentives. I'm not going to get into whether or not IOTA is a tangible product. I think it has some issues. I also think it has some cool potential tech. Again, if it can solve it and make a working product, great. But this pastebin is pretty interesting because it talks about Digital Currency Group, who owns CoinDesk, Morgan Peck, who's a journalist who writes for CoinDesk, and Digital Currency Initiative, which is in the MIT Media Lab. I'm going to gloss over parts of this, but going down to the main piece where it talks about the various conflicts of interest, Morgan Peck is a writer for CoinDesk, which is owned by Digital Currency Group, so it's safe to assume that she's paid by Digital Currency Group, and this person pulled a bunch of data talking about it. So Digital Currency Group is invested in Zcash. Morgan Peck writes a lot of favorable pieces around Zcash. She was invited to the Zcash ceremony, and she wrote some negative pieces around IOTA. She also happens to be following a bunch of Zcash people who follow her back. So that's one piece. Conflict of interest, CoinDesk, Digital Currency Group. So same thing, CoinDesk has published a lot of positive news about Zcash, negative news around IOTA. It is mentioned almost 3-to-1 Zcash versus IOTA, and half of those for Zcash were articles, with only 3 being written about IOTA. And again, Digital Currency Group is invested in Zcash and owns CoinDesk. The other piece is Grayscale Investments, which is a subsidiary also of Digital Currency Group, has a Zcash investment trust and thesis, as well as a few articles around Zcash. The last piece is this Digital Currency Initiative out of MIT Media Lab. They originally developed Zerocash, which went on to become Zcash, and the DCI team that posted all of the IOTA vulnerability reports that came out were from researchers out of the MIT Media Lab. So it's interesting to see how all of these are tied together. Not talking conspiracy theories, but I am trying to point out there's a vested interest for Zcash to do well and IOTA potentially to do not as well. The point I'm trying to make is you need to have a balanced opinion related to this entire space. Everyone has a different incentive, everyone believes something else, and if you just go to a subreddit for Neo, for example, it's going to be an echo chamber. In the subreddit for Neo, Neo's the best thing since sliced bread. It's going to go to the moon, everyone's going to be a millionaire, and there's no problems ever. Do your own research and make an educated platform that you determine your investments on. That's all I've got for right now until the next episode of Chain Genius. If you like what I'm saying, hit that subscribe button, ring the bell, and I'll talk to you later.